Sawadee-krap! Today we're going to talk about Thai SDRs. All right, and for local investors who invest in SGX primarily, there are very interesting ways for us to get some exposure to blue chip stocks from the Thailand Stock Exchange. All right, so let's jump into this very quickly. And let's begin with a discussion on what a Singapore Depository Receipt or SDR is. All right, so these are foreign stocks, stocks that are traded in the foreign exchange, but they can also be bought in SGX because SGX has some kind of arrangement for local investors to actually physically own these stocks. All right, in our CDP. Okay, and you will find that prices and dividends are denominated in Singapore dollars. And you actually, once you buy these stocks, dividends will arrive net of taxes a few days late compared to their original exchanges. But it will arrive in your bank account in Singapore dollars. So this particular process can be as passive as owning local stocks in CDP. So you don't have the problem of money appearing in your custodian account, and then you need to make a special withdrawal for the amount of money to come into your account. The money actually goes straight into your bank account, right? That's even if you're lying in a coma in the hospital, right? Your family, if they have your PIN number, your ATM card, they can still actually draw money and engage in family expenses. So very, very powerful tool for dividends investors, all right? So essentially, with more Singapore Depository Receipts in SGX, this expands the offering of high-yield stocks for very old-school dividend investors like me, all right? So I'm somewhat old-school, okay? So very, very powerful tool. Okay, and we're going to go into the so-called less popular SDR, which is the Thai SDRs, all right? So these are Thai blue-chip stocks that are listed in the Singapore Exchange. And so what I've done is with my programming code, I could actually get artificial intelligence to give me a Python list of these counters in the main stock exchange, and I'm able to just sort them based on dividend yield. So if you look at the table that I have to the right, immediately if you look at all the SDRs, there are only two dividend stocks, all right, which is PTTEP, which is an oil company, right, and the current yield is about over 10%, right, very attractive. And KBANK, right, which is a Thai bank, also giving north of 5% dividends, right? And these two ticker symbols, TKKD and TPED, are the local ticker symbols that you use if you want to buy them in the Singapore Stock Exchange, right? So yeah, so immediately we've only managed to look for two counters that are useful for dividends investors, all right? And if you look at the correlation between the bank and the oil company, obviously the correlation is going to be low because they are in different sectors. Collectively, the correlation against the STI is below 0.5. So generally speaking, these Thai blue chip stocks can expand the repertoire, increase the diversification of an existing bank and REIT kind of portfolio that a local investor have. All right, so very, very useful. Okay, now if you look at the historical performance between PTTEP and KBANK, you find that over the past decade, the returns are actually higher than our STI ETF. So they actually do produce improved meaningful returns. However, they do that with a much higher standard deviation. So the risk that you take when you buy these two stocks individually is a lot higher. And obviously the maximum drawdown is 60%. So if you do your market timing wrongly for these two counters, the consequences can be twice as bad as buying the STI ETF. All right, so you need to be very careful. The overall risk-adjusted return is actually inferior to Singapore, all right, with a Sharpe ratio of 0.3 versus 0.4 in the case of STI ETF. Okay, so this is not something that you can invest on its own, all right, but it's something that you can add to an existing portfolio. All right, so do take note of that. All right, so generally my students will build a very solid portfolio of dividend counters in the Singapore stock market, and then we will supplement it with some of these Thai and Hong Kong blue chip stocks into the mix, so that we can have money all year round, and we can treat it more like a passive-like kind of investment. Okay. All right. So there are only two stocks. So let's drill into each of the stocks one by one. I fortunately these days I do a lot of coding with ChatGPT, and ChatGPT is also very useful in getting into the gist of these counters. All right. So some points on PTTEP. I got ChatGPT to tell me what the key drivers of profitability are, and they're basically core oil and gas operations. They're also into low carbon and renewable energy, and they also have some digital initiatives. All right, so combined together, nothing unusual, right, about a modern oil-like kind of arrangement. Okay, the overall growth, it's not particularly high, humble at about 2 to 3%, very similar to Thai GDP growth. Okay, so big companies are like this, and the most crucial point is that it is an oil company, so you have to analyze crude oil prices. Unfortunately, for people who are investing in crude oil companies or crude oil, you find that APEC Plus is boosting production, so we could expect crude oil prices to go down over the next 1 to 2 years. Of course, things are very volatile, things can change, but at the moment, we're looking at lower oil prices over the next 2 years, all right, because OPEC is increasing their production. However, if you're looking at liquefied natural gas, it's trending up. Okay, so moving forward, what do I expect about revenues? There will be some pressure on oil revenues, all right, but as a result of this, the current dividend yield is very high, right? Because we expect poorer business in the future, so people will pay you to delay gratification. So at the moment, dividend yields are actually quite nice, quite lovely, right? And I also asked AI to tell me how many buy and sell counters there is at the moment. So it's able to go into the web and crawl. And it tells me that there are actually more buy calls than sell calls. In fact, majority are buy calls, with DBS calling for buy on this counter. All right. So I think overall, because the yields are so attractive, it is a great source of dividends, from oil. All right. Because oil is so different from REITs and banks. This is a very good source of, I would say, 6 to 8% dividend, given that we've already factored in a dividend cut, right? The current yield is about 10%. Maybe we can expect about 6% if we hold on to this. All right, so not too bad, right? Not too bad. All right, I have this in my portfolio for a while already. Okay. All right, the next is Kasikorn Bank. All right, Kasikorn Bank, we know quite a bit of banks in Singapore, and the question is, can Kasikorn Bank improve on our mix of stocks, right? And so the key drivers are very similar to our local banks, right? Reinvigorating credit performance, in other words, maybe finding ways to improve the quality of the loans, all right? Scaling capital like fee business is very similar to wealth management, and pioneering digital asset sales models, which means that, maybe as a Thai bank, maybe it's not as advanced or as digital as DBS. So it has a long way to go to actually digitize their offerings. So you're betting on maybe a DBS-like kind of entity 20 years ago, right? Okay, so that's basically Kasikorn Bank, right? And then obviously, like we look at local banks, we look at interest rates. Bad news is Thai interest rates are trending downwards. So a lot more is going to hinge on these wealth management fees that they charge, right, to their customers. So you need to look at that very carefully. And if you look at the number of buy calls, in fact, there is a larger majority of analysts that say buy this counter, right? So with UOB Kay Hian calling for a buy. And so once again, this is a great source of dividends coming from a different market, coming under a different currency. So it might be useful as a diversifier, all right? Yeah, so actually, if you think about it, Thai SDRs might be more about the geoeconomics of Thailand, right? So I thought it might be useful to just create a slide that talks about Thailand as a country, right? I mean, it's also a good place for a lot of Singaporeans to emigrate to, I think. Okay, so growth prospects for Thailand appear mixed, all right? Growth is between 2.5 and 3%, maybe slightly about the same as Singapore, but you need to think about it at a different stage of development. So if the GDP growth is the same as Singapore, it's actually not good, all right? When you're looking at Thailand, you also have to look at tourism, right? A lot of scandals, kidnappings and all that can have a negative effect on tourism, so you have to monitor on that. And what is particularly interesting about Thailand is that they're trying to build a digital wallet for their citizens. So you also want to look at that as well, because once a digital wallet is built, money can be helicoptered down, and then it can stimulate some spending. All right. Yeah, but the bad news about Thailand is that demographic trends look very bad. Yeah, and the TFR is about 1. They're not producing enough babies, so the population is aging with the workforce shrinking as well. So it's something that you might need to think about if you're investing in Thailand. The long term doesn't look particularly good, right? I mean, it's not like Singapore. Singapore, our fertility rate is worse, but Singapore will always engage in inviting more foreigners to come and work for us, right? So this is not the same kind of situation as Singapore. So over the long term, there might be issues with Thailand, right? So that sums up my short briefing on how to think about Thai SDRs. SDRs are a good diversifier from traditional sources of dividend income. Like most of us, especially people in their seniors in the 50s or 60s, your money is stuck with local banks and real estate investment trusts. You want to move your money into some counters that, for example, in an oil counter, so you get the same amount of dividends but from a different source, so that overall, you're more diversified from your traditional sources of income, right? High dividend counters face macroeconomic, long-term demographic headwinds. Okay, but at the moment, both of these counters come under strong analyst recommendation. All right, so you might want to actually drill into these analyst reports on your own to see whether these counters have a place in your portfolio. All right, now do take note, liquidity in the Singapore Stock Exchange for these Thai counters is low. Okay, which means that you have a bid-ask rate that can be very wide. So if you want to buy these counters, you might have to wait. That means wait for the bid-ask rate to close in a little bit before you buy, or simply offer a higher price to the person selling it to you because you're holding it over the long term. Once you get one round of dividends, it pays for the cost of investing in this counter. So that's what I normally do, right? I don't try to wait too long. If I want something, I buy it, so I don't think about it anymore, right? Yeah, so I'm always prepared to pay a slightly larger bid-ask rate, okay? And I wouldn't think that these two counters are good for speculators, right? So if you buy it and then you're willing to spend the next 5 years collecting dividends, that's fine, right? But if you buy it thinking that you can unload it to someone else when the price is higher, the bid-ask rate will come back and bite you pretty badly. So that's something that you might want to think about. All right. And so that concludes my discussion for today. I think it's pretty obvious what my next video is going to be. I will spend a little bit more time talking about Hong Kong SDRs that definitely are very popular among Singapore investors. So I'm likely to put a very dividends kind of passive income slant to it. All right. So hope to see you soon in the next video. Thank you very much.